There's not a lot of opportunities like this that are advanced, that are permitted. I think we've been able to demonstrate some very good progress over the last 2 years as we picked this asset up. I mean, when we arrived, there hadn't been a geologist on site for 4.5 years, and so that equity component, we would look to be bringing that into the market then this year, and then effectively having a fully financed project that we kick off on in 2020, looking to deliver that in early 2022. We're quite confident we're going to be mining here for decades.
Hello and welcome to Crux Investor. We spoke earlier today to Darren Klinck. He's the CEO of Bluestone Resources, a Guatemalan high-grade gold development company. They are raising some money imminently, and Darren explains why we will like the terms that he's negotiated. We shall see. But with an AISC of $600 at today's prices, that's clearly very attractive. The one negative might be the fact that it's a single asset with an 8-year life of mine. If you want to look at some of the topics we discussed, look in the description below, click on the relevant timestamp, and that'll take you to that part of the video. And if I could ask that you click the subscription button in the corner of the screen. And if you want to see more videos like this, please click the notification bell. But let's hear what Darren had to say. Hi Darren, how are you, sir?
Very good, great to be here.
Well, I haven't spoken to you since I think end of August. Things have been literally up and down and up for you guys. Going well. You happy?
Yeah, no, we're really happy. We made some good progress here over the last 6 to 7 months, and this is going to be a big year for Bluestone.
Yeah, well, it was an exciting story when we spoke to you then, but we'll get into that in a second. Give us that 1-minute overview, helicopter overview, and then we'll get stuck into the questions.
Sure. So Bluestone, relatively new company. I mean, really just been in existence for the last 2.5 years. We picked up the Cerro Blanco gold project from Goldcorp in 2017. Really worked diligently at that point to complete a feasibility study, which was completed about 11.5 months ago. And we're now heading kind of towards into a development stage on what is going to be, one of the highest grade undeveloped gold projects that's out there today. This is a project that'll generate, between 110, 150,000 ounces of gold per annum at an all-in sustaining cost of $579 per ounce. It's a 10 gram per ton deposit, so there's just not too many more high-grade sort of deposits being created by Mother Nature anymore, at least in our timelines. This is permitted. It's had more than $200 million invested in it previously by the previous owners. So it was quite an opportunity for us to step into an advanced project, permitted, high grade, great returns, and ultimately we're right now focusing on getting the project financing in place to kick this off.
Great summary. I'm not even sure we need to do an interview now. That was a great summary.
All right, let's close it off there.
and on a high. Look, the question I do want to ask is, and I think it's important for you to help investors who aren't in this story yet, because I do like the story a lot. For people who aren't in it yet, help them understand where you sit. Okay, so you've got your feasibility done. You're permitted, you're close to production, you're real close to production. You just need to sort out the financing, right? So that if people are looking at that sort of cliche chart that goes around in some stage of development, you are just at the cusp of something quite good, you think?
Yeah, well, I mean, this is the unique thing. I spent more than a decade with Oceana Gold, as we built that company into a mid-tier sort of producer, starting really from one single asset. And as we know, I mean, in our space today, I mean, typically from discovery through till production is, 13, 15 years in the making. This is the unique opportunity here. We stepped in and had kind of the fast forward button in your DVD player because, ultimately, prior to Goldcorp was Glamis, and they invested a lot of dollars here as they went through the drilling, the engineering, all the environmental, started the underground development. There's just not a plant there. And in fact, there's about sort of 30,000 ounces of gold in stockpile sitting at surface, 3.5 kilometers of underground development. And so, the mining permit is in place. We actually advanced some of the underground development, albeit, minimal this year, again, as part of our ongoing sort of advancement of the assets, and also opening up the underground for some of the underground drilling, which was a key component of the activities this year to move some of the inferred material that were on veins that were in the mine plan that came out in the feasibility in January of last year, and get those into measured and indicated, so we knew in the next mine plan update we can move them in. And so we're on the verge.
So Darren, let's talk about the finance. I think that's what everyone's keen on, because that is what all this future success hinges on. Can you get it done? So where are you with those conversations? How long is it going to take, and what's it going to cost you?
So I think that is a differentiator today. And there are development projects that are out there, some of which are still working through the permitting process. But getting the finance in place, I think, sends a big tick from the perspective that it's a viable project that can be financeable. We kicked this off in April of this past year, and really went two different kind of tranches or directions, I guess. The private equity direction along with the commercial bank direction. And had strong interest on both sides. I think one of the things that we were quite pleased with, though, is that on the basis of really the advanced nature of the asset, the fact that it's permitted, it's had all this sunk capital, the interest from the commercial banks was very strong. And ultimately, as we know, dealing with project finance facilities and the commercial banks, you're dealing with a cost of capital materially lower than what you would see in the private equity world. And so we've ran those in parallel, but definitely we've put a lot of focus over the last sort of 3 to 4 months with the commercial banks. There's export credit agencies involved as well, as along with an international financial institution. And so I think really what we're aiming towards here is probably towards the second quarter, maybe the early part of second quarter, hopefully be in a position where we can put something out into the marketplace and really kind of bring this to bear and demonstrate that we've got a good debt package in line.
Right. And again, worth stressing to people, it's not unusual. We typically used to allow 12 months, sometimes 18 months to get those packages in place for large debt structures. So how much money are we talking about here?
Sure. Yeah. So the feasibility study was at 200 million, just under 200 million, 196 in fact. And of course, then when you start to look at, the additional costs associated with, your insurance and your working capital, et cetera, the number will be a little bit higher than that. But, what we're hearing from the project finance, within the commercial banks is probably somewhere in the 150 to 180 million dollar range, right, which is quite good. And I think from the perspective, when you look at the margins and the payback, at today's gold price, this project pays itself back in less than 2 years. I think it's 1.5 years. And so these are the advantages we've got. We don't have a lot of sensitivity to commodity prices because of these margins. And there's been a lot of work that's gone into obviously de-risking this project with the feasibility study and subsequently.
For sure. So yeah, this is one of the cheaper financing options for you. You've got enough cash in the bank, so you haven't been tempted to kind of get more expensive money just to kind of get things going, or have you?
Sure. Yeah. Well, no. I think that ultimately we will have to bring an equity component in. That's like any sort of debt to equity. We're fortunate to have quite a strong group of shareholders behind us. So the Lundin family is our largest shareholder with a 35% interest. CD Capital out of London, where you are there, has another sort of 14%. And then there's a number of institutional investors throughout Europe, the UK, the United States and Canada that all kind of hold 1, 2, 3, 4%. And so again, there's not a lot of opportunities like this that are advanced, that are permitted. I think we've been able to demonstrate some very good progress over the last 2 years as we picked this asset up, which was effectively on care and maintenance. When we arrived, there hadn't been a geologist on site for 4.5 years. And so that equity component, we would look to be bringing that into the market then this year, and then effectively having a fully financed project that we kick off on in 2020, looking to deliver that in early 2022.
Just help me understand the cost of financing. You say we'll enjoy what you've come up with. That must be highly linked to the kind of free cash flow position you're going to be finding yourselves in. So are people taking advantage of you there, or are they going, actually, no, this is a company we want to work with. It's pretty easy money.
Yeah, no, I think when you go down the project finance sort of route, with the commercial banks, ultimately you do that recognizing that it takes a bit longer, as you alluded to. 12 to 18 months is often very typical. I think we're going to be on the lower end of that. But then you get more of a plain vanilla sort of project finance structure. I think ultimately, where a lot of projects have been financed over the last sort of 5 to 6 years, when you go down more the private equity sort of route, there tends to be other add-ons, if there's streams or off takes or equity sort of participation from a warrants perspective, etc.
Yeah.
At the end of the day, when you're dealing with commercial banks, I mean, they're there to lend the money out and get a return and get it back. And so I think for us, and again, kind of underpinned by the strength of the Guatemalan economy and the fact that it is a good place to do business, and the interest from the international banks, that we're in a good position there. And when we take that and we kind of put that together with the asset itself, with the quick payback. But again, I mean, we have to remember this is an asset that is going to generate more free cash flow in the first year of annual production than the market capitalization. So there's a lot of buffer here, and ultimately this comes down to grade. Mother Nature's not making too many more 10-gram deposits, and that's where the rubber hits the road here.
Okay, that's fantastic. I appreciate that. What I was going to get into, and I sense that you're going to tell me wait and see, is the amount of securitization normally for project finance is quite high, and it drops away during the course of the term of the loan. But if you're throwing off cash at the levels that you are, I can't imagine anyone's going to be asking you for too much. We shall wait and see, I guess, shall we? Or are you going to tell me?
Yeah, it's going to be it's pretty plain vanilla. I mean, as far as that goes, nothing beyond the project finance, and of course with these margins, of course your cash sweep, it means that it's going to shrink down as long as the gold price stays at this level, or in these ranges. Yeah. It's going to shrink down your tenor of your loan as well, right?
Okay, so all good news. Well, the other bit of good news, obviously, the ASIC remains below $600, and at today's prices, that gives you quite a generous margin as well. So all fabulous things that the market needs to hear, but you haven't quite taken off yet. What's holding you back? Is it single assets, short life of mine? What's making people nervous?
Yeah, I think, with regards to the life of mine in the feasibility study, it was around 8 years. I mean, based on these extensions with regards to moving the inferred into measured and indicated actually in the deposit itself, I mean, I think we can see an 8 to 10 year mine life as we get out of the box. And once we turn this asset on, that's not atypical for a low sulfidation epithermal underground mine. I've been involved with them in other parts of the world, and 8 year mine lives turn into 30 years sometimes with these sorts of vein structures. And so we're quite confident we're going to be mining here for decades. But I think with regards to, what's ahead, and we talked about it earlier, it's no doubt the fact that, differentiating yourself as a project that can be financed, that actually comes into cash flow. I think that, at the end of the day, this is a business, and this is a business like any other. You need to generate cash flow. And in order to generate cash flow, you've got to invest the capital to build the mine, to produce the gold, to pay your taxes, pay your royalties, and then obviously pay back your investors. And so that's where we are, and we're gonna demonstrate that our ability to do that. And I think over the last 2 to 3 years, companies that have been able to kind of differentiate themselves and get financed and move in, you've actually seen equity appreciation into the 3 digits, in fact.
Right. Okay. So when we spoke last time, I said you were in that very boring phase of just kind of waiting around for things to drop into place. Your share price, went up slightly after our interview, came back down again before Christmas, and then it's kind of shot back up to pretty much where you started 12 months ago. So there hasn't been this kind of seismic shift. And again, I put it down to this kind of quite boring phase of people waiting for announcements to happen. So what are you going to do now this year to help the market understand where you're at? Or don't you care because most of your shareholders are institutional?
Oh, no, I think we all care. I mean, in fact, at the end of the day, the price of the stock's always priced with the retail shareholder. I mean, much like yourself or I. So no, definitely we care. And I think, it ties in with that discussion point earlier, is that, we are putting the foundational pieces in place here to build a mining company. When I joined 2.5 years ago, it was something that wasn't lost on me, that there's not too many 10-gram deposits around that are permitted, that have had sunk infrastructure, that have those sorts of margins to be able to actually build a company around. And so I think for us, as we move forward this year and are able to bring the project financing home, we're going to send the message to the marketplace that this is a project that is going to be built, and that in 2 short years it's a mining company generating good returns. In fact, reasonably at these sort of gold prices, generating more free cash flow than the market cap in the first year of annual production.
Yeah, well, I mean, that's exciting, really exciting, because that once that cash starts flowing, people will start to believe you. They're gonna hear you. But today, What do you say? I mean, what are the things that you're going to do? You talk about we're going to tell the market to the story, but what precisely? Not no generalizations, because everyone does it. It's hard for you to stand out if you say the same things as everyone else. What are you guys actually going to be doing? Q1, Q2, Q4. I mean,
Okay,
how
sure.
do you move into, actually getting that money in, and then how do you deploy it? And then how do you move it from an 8-year life of mine to 10
Sure.
to 20
Yeah,
years?
no, I can
Saying
definitely give you that granular.
you may
Yeah.
be sure, but market doesn't get it.
No, for sure, and providing the clarity. Yeah, you bet. So I think from with regards to the life of mine, we've actually already seen. So we updated the resource here since you and I last spoke.
Mm-hmm.
We've added just over 200,000 ounces to the measured and indicated sort of categories, and so now those ounces are actually eligible to be looked at from a reserve perspective. We would
Mm-hmm.
expect to update the mine plan later on this year because we've got more drilling happening right now, focusing on the south zone. And the idea being is that once we get the infill drilling done, then on the south zone, you take the south zone and the north zone, you put together a new mine plan, a new mine schedule, and then ultimately that's what you're kind of moving forward with
Right.
as you're working in parallel with the construction of the plant.
Right.
Over the next sort of 3 to 6, 7 months, we're into engineering, right? So basic engineering into detailed engineering following that. We've got optimization work that's going on up front really right now over the next 3 months, looking at, particularly the plant, ways that we can potentially optimize the plant. And that's going to happen here again in that sort of 3 to 6 month period. And over the next 6 to 8 months, you've got your engineering that's up front, et cetera, and really sort of nailing down your flow sheet, putting long lead time orders out in as we get into the middle part of the year. And that's really part of that development, phase that we're into. And so this is the meat and potatoes of our business.
Great. And can you afford that?
Well, yeah. I mean, ultimately, what we're going to need to do here is we need to get the project financing sort of locked down, and I think we expect to see that in the second quarter, and then we'll be out in the market to bring in the equity component of that as well. And so I'm very confident, for some of the reasons I mentioned earlier, that as these two, and I think often what you see is they kind of move kind of lockstep, right? I mean, as you can continue to demonstrate progress with the debt package, then the equity investors get more comfortable, and as the equity investors get more comfortable, then the debt providers get more comfortable. And so that's what we've really been focused on over the last 4 to 5 months. I just had a series of meetings last week actually with our lending group, and I'm very confident that we're going to get there.
Great. Let me I just want to be really clear because I wasn't quite sure. So you're looking at the debt package. There will be an equity component to that. Have you got enough equity? Have you got enough cash in the bank today to get you to the point where you start? Well, one, you get the structured debt package in to get into production, or start that process, or do you need to go and raise a small amount of equity before then?
Sure. Yeah, no, our intention is not to raise any equity right now. We're actually discussing with financial groups right now, actually is putting a facility in place that potentially would then be taken out with the project debt. And so that's actually quite well advanced, and you could expect to see something on that here over the next few weeks.
What's that, like a bridging loan, or what?
Yeah, similar to that. That's right.
So
yeah.
That's quite expensive, isn't it? But I guess you've worked out that it's cheaper than...
Not in this case, it won't. Watch the space.
Okay, I will watch the space. When should I be looking out for that? Q1?
Over the next couple of months, you'll probably see something on that.
Okay. So let's not shy away from this single asset thing. So you may kind of build this out from 8 years to 20 years. Who knows, right? What else are you doing in terms of reducing that single asset risk?
Without a doubt. I mean, I think that when you talk about the mining industry and single asset risk, it's something you have to be so focused on. I think that ultimately what our objective is here is to build a mining company. That means that you're going to add additional assets into the portfolio that you then can obviously rely on. However, I have to be totally upfront. I mean, 130% of our time right now is focused on Cerro Blanco. This is an asset that will be built and will generate great returns. And I think as we get that financed and get into that sort of development phase and heading towards that direction, we'll open up some opportunities then to potentially look to add to the portfolio. But at this juncture, I mean, 130% focused on getting this over the line.
Okay. I think that'll go down well. You started trying to push the geothermal story at me last time. Is that parked as well?
Not parked. In fact, it's quite a unique opportunity, and there's not too many projects that have the potential to generate their own power as well. This is a little bit to the east of the project. It came alongside with the gold project when we acquired it from Goldcorp.
Hmm.
They had done quite a bit of work on it, utilizing experts out of New Zealand in particular, years ago when the power grid was quite a ways away. And of course, we had very high power prices on the back of oil price going to $150 a barrel, etc. What we've seen over the last sort of 6-7 years in Guatemala is power prices have come down. There's been a lot of hydro as well as biodiesel plants come on, and so you've seen the cost of power go down.
Hmm.
And then ultimately, from a development perspective, to capitalize a geothermal project, right now, it's not necessarily the best environment from an economics. Having said that, we've got about $60 million of sunk capital into this. We got some folks involved out of the U.S., some experts in 2018, and we did some flow test work. There looks to be 5 to 10 megawatts of power potential that exists already.
Hmm.
We don't, of course, have the turbines, set up to produce power. But in my discussions late last year with the incoming mining and energy minister, it seems pretty clear that Guatemala is going to continue to try and look to replace some of the coal-fired power in the country with that is more renewable.
Hmm.
And so I think geothermal is going to have quite a positive future over the next 5 to 10 years. And so opportunities will exist, I think, and will open up. And as they do, I mean, we're well positioned with an advanced geothermal project to potentially jump through there.
Okay, so it's not parked. So how much time, how much money are you spending on it?
We're not really spending any money on it right now. I mean,
Okay.
right now for us, it's really just monitoring the marketplace, obviously discussions with the government, etc. I think our objective over the medium term will be to look to try and integrate that somehow into the mine. But
Right.
right now, I mean,
It's
grid
parked.
power is, yeah,
Darren, it's
grid power
parked.
is, it is. No, no, it is parked, but it's an optionality. It's
It's an
optionality.
option.
I mean,
There you
100,
go.
100
Okay, I'll buy
yeah,
that. I'll buy that.
and it's 100. Our focus is on the mine, and really we decoupled that 18 months ago and said, look, let's just go power off the grid. Power's street cheap. We can string the power lines.
Okay, so let's park that conversation, and I need you to help me, Darren. So when we spoke at the end of August, you said you were going to do some marketing. You were going to go, do some roadshows, go to some conferences, talk to some people. What worked? What didn't work? What would you not do
Right.
again? What would you do again?
Yeah. I mean, I find that, look, I guess just being upfront, there's a handful or a couple of key conferences we try to attend because we tend to see that everybody sort of culminates in one
Yeah.
place.
Yep.
But I think if as a senior member of the management team here for a public company, I mean, you could be at a conference every other week if you wanted,
Mm.
zipping around on airplanes, and I mean, but you don't get any work done.
Yeah.
At the end of the day, your job is still there. And so we tend to be fairly selective. We find that we get more out of sitting down one-on-one with investors. We've really put quite a push on over the last 24 months
Mm.
on meeting with family offices and high net worth investors. We've got investors that come out of Scandinavia, out of the Middle East, out of the southern part of the U.S. And it's in kind of taking our time and adding that sort of that one-on-one aspect of things is better
Mm.
than just showing up at a conference and seeing the same people all the time. So that tends to be our focus. I think it's worked pretty well. We've got a pretty strong and supportive group, albeit when you look at the shareholder register, I mean, there's not huge amounts of liquidity, but I mean, we're backed by some of the best and well-known investors in the space.
Okay, that's interesting. So some conferences perhaps not worth you spending your time. It's different for every company, I guess. But I think
Yeah,
we would concur with that. Now, as a result, you've got some pretty good coverage now, with
we do.
numbers ranging
Yeah,
from 240 up to $3. So again, you pay.
yeah,
Sometimes you pay attention to those things, sometimes you don't. But it's generally positive.
yeah, and I think for us, what we found is that one of the best things that we've really been able to do is when folks are able to come down and visit, whether it be an individual investor or an analyst or a banker or an institutional investor, when
Okay.
you come down and actually get a feel for Guatemala and the project, it sells itself.
You said that
And so
last
that's been a big
time.
plus.
You said that last time, and you've got a mine visit coming up soon, haven't you?
Yeah, yeah. So we they're pretty easy to do. I mean, this is the other thing as well is that we're 3 hours down the Pan American Highway from Guatemala City. You arrive in the evening, drive down in the morning. You can visit the site, go into the community, have lunch, get a feel for where I stay when I'm down there and where our team is, and then circle back and be back in time for dinner. So yeah, I mean, logistically, this is a dream, and as I said, I mean, it shows well as well. We've got a new government in Guatemala as
Yeah, I
well. I
was
mean,
going to
the
ask,
new, yeah,
how's El Presidente? Is he
yeah.
pro
So I
mining?
mean, I think we're day six now with since the new administration's taken over. This has been a bit of a transition period because effectively. President Giamatti was made president-elect in August of last year, and so you've had, kind of 5 months, I guess, of a transition period. But yeah, last week the government was officially sworn in. We're already seeing some positive movements with regards to some of the activities that have come out of the government since they've taken up their office. President Giamatti, firmly campaigned on a pro-business, pro-foreign investment platform, and we're seeing that actually already starting to come through here now in the first few days. So I think we're really pleased about what's happening so far. I think we're really confident about Guatemala. Most people don't recognize, and I'm not sure whether or not your listeners do, that in fact the economy in Guatemala is one of the stronger economies in Latin America. The 10-year government bond rate in Guatemala is 30% lower than what you would find in Mexico or Brazil. In fact, and so most people don't necessarily key in on that, and also the fact that it's had the most stable currency in Latin America for the last 10 years. So a great platform there, and we like it. And geologically, it's look, I mean, it's a very well endowed country, and we think there's a lot of potential there for many years to come.
Okay. Thanks for that summary. Some great numbers in there. We'll wait to see, what you do with regards to the financing, how you structure it, what it costs you. I guess with your margins, it's kind of inconsequential.
I think you're going to like the cost, though. I think we're going to surprise the market there. So
okay. Well, we'll wait to see. Darren, thanks very much for running through that. Some fantastic numbers in there. Some near-term events which we look forward to hearing about. Stay in touch. Let us know how you get on, and thank you for your time today.
My pleasure. Great to be on, and look forward to keeping you posted.